Hey everyone, this is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. As we do each and every week, we go through the markets and talk about some stocks of interest. The stocks that you see on your screen now will be featured in this week's update. And if you have a particular stock you're interested in, you can click on it using the chapters feature in the video and go straight to it and avoid the rest of it if that's just what you're particularly interested in. All right, so taking a look at the market, we did move to the downside today. We've been talking about a potential bounce up to that 440 level that I have on the screen. And we've also been talking about the bounce up and filling this gap. Well, we didn't quite make it to 440, and we haven't quite filled that gap, even though it looks like maybe we have. Officially, it hasn't been filled yet. And when we put the moving averages on, the interesting thing is over the last 4 trading days, the high of the day has touched the 50-day moving average. That's the royal blue line. The difference is today we closed below the 10-day moving average. First time we've done that this week. So what does that mean for next week, if anything? Last night's insiders meeting for our subscribers at evotrader.com, we're talking about it was going to be interesting to see how the market closed today, if there was squaring of positions. I think that had a lot to do with the movement today, with the conflict that's going on over in Israel. Who knows what kind of news could come out from that, and perhaps people didn't want to continue holding this bounce to the upside. Maybe it's that. Maybe it's something else that I'll show you here in just a minute. But closing below that 10-day moving average certainly gets your attention if there's any follow-through to continue lower. We do have a pretty good wave forward there at a 52% correction. So right at that 50% level is a strong one. And it's also right at that 420 level that we've talked about so often. So right in between 420 and 440 is kind of no man's land for the markets right now. As we move over to talking about the economic news of the week, we did have the PPI report that came out. That's wholesale prices. It was a little hotter than expected, but not that bad. Then we had the CPI report that came out yesterday, and that was slightly hotter than expected as well, but not when you looked at the core CPI, stripping out food and energy. And I'm not going to go through my soapbox on that, on how ridiculous it is to even have a core CPI. But the difference is, which I think is noteworthy, is it was slightly hotter on the PPI, the wholesale side, than the CPI. Now, why that's meaningful is if wholesalers, producers, are having to still feel increased effects of inflation, but aren't able to pass those prices on to producer or to consumers, then we have a bit of a compression of margins, and that may come out as earnings season kicks off here in earnest within the next week or two. We've already had some earnings come out, but it'll really get going. Now, we had what you thought would have been some positive news today come out from Philly Fed President Harker, who said that he favors keeping rates right where they are. Figured that might be positive. It didn't work out that way. So is it what was going on over in Israel? Maybe, because then when we take a look at the chart of the TNX interest rates, we were talking about this Tuesday night in our Tuesday night TradeFinder, how you have these correlations in the market, and correlations exist until they don't. And by the way, if you haven't signed up for TradeFinder, please do so. You can go to the link that you see on your screen right now. We do it every Tuesday night at 9 p.m. Eastern Time. It's free. We talk about the markets. We look for trade ideas, and we have a live Q&A at the end. And we have a great community. So please join us if you haven't already. It's an awful lot of fun. So again, mentioning that, and the timing is interesting. Correlations exist till they don't. And the correlation that we've had in the market that we've been discussing is interest rates. And rates, as rates moved up, the market moved down. If rates were down, the market was up. That's been the correlation. That changed today. You can see that where we are in this bar with the rates today on the 10-year, it was lower. So rates came down, and it was a decent amount, and yet the market was down. So is that correlation broken, or is it just the conflict over in Israel and the Gaza Strip that's causing that market to move to the downside today? Looking at the dollar, The issue here is the dollar moved back to the upside, along with that movement to the upside yesterday in the TNX. So you got interest rates moving up, you got the dollar moving up. The dollar was flat today, so that's kind of a double whammy to the markets when both are going up. But again, flat dollar today, lower rates, but yet the markets were lower. Taking a look at the VIX, we're kind of right in between support and resistance. We've had that support down in the 13, 14 area, and we've had resistance up here around 17, 18. We broke above that, so we kind of raised this range up, I think, to right at 20. So it looks like 13, 14 up to 20 is a range, and we're kind of teetering towards the upper end of that. If we break out of that, then yikes, that's not a positive for the market moving forward. But it has to break it, and when it got above 20 last week, it didn't hold it either day. So we'll see how that plays out beginning of the week, barring any sort of, it was a surprise announcement last Saturday morning. Hopefully that we don't get any surprise announcements over the weekend like that. Perhaps that played into it. People got maybe a little bit caught off guard. But the market, I think, handled it all in all pretty well until today. Taking a look at Bitcoin, Bitcoin has pulled back just a bit. It's still holding the very important area of 26,000. And as we've talked about numerous times, if we break below 26,000, we still have support at 25. So we've got a good little corridor of support on Bitcoin between 25 and 26,000. If it breaks 25, though, here it comes. It's Katie bar the door time, because we're probably coming all the way back down to 20,000. There's actually nothing in the way here. We had this big vertical move up that occurred back in March from 20 to 25,000. So we don't have anything in the way to support it on the way down if we break 25,000. Held in there pretty well today. So it's nothing to be alarmed about yet, just things to watch. If you are long Bitcoin, you want to see it hold 25,000. Even if it breaks 26, you still have a little bit of support there at 25. So don't panic until it break 25,000. And then we have to take a whole different narrative other than the one we've been talking about, with the potential of that halving to start at the first quarter of next year. So no harm, no foul yet, but something to keep an eye on. We mentioned last week that we did have this little triangle. It wasn't much of one. Talked about it Tuesday night in TradeFinder as well. Not a big one, but nonetheless, triangles matter. Elliott says don't diss the little triangles. They matter too. And there's the breakout to the downside from that. But again, it wasn't very large, so it wasn't significant. Certainly not enough to break below 26 or 25,000. Moving over to stocks of interest, and this was asked about in last week's video, and I do read all the comments on these market update videos, so please post your comments. If you have a special request, we'll do our best to get to it. I read each and every one, and keep posting those comments, because when you do, you go into our drawing where we're giving away 4 of our level 3 alert service packages, which is worth thousands of dollars each. We have directional, we have non-directional, and we have an AI-based income strategy as soon as we hit 40,000. And all you have to do is post a comment to register, but go get your friends to become subscribers. Hit that subscribe button, and once we hit the 40,000 subscribers, we'll give those 4 away. So y'all are doing great. Keep the comments coming. We do appreciate it. So looking at Coinbase by request, we're still holding above 70, which is a key. We do have a 5-wave pattern here, but perhaps that 5-wave is in, perhaps it's not. The fact that it's still that kind of Kelly green or lime green color there is telling us, teal green, that it's not confirmed that it's finished, which means if we break below 70, that wave 5 will move over here. And that wouldn't be good on Coinbase, because we probably are going to make a move down towards 50. But again, we're not there yet. So far holding in. We need to stay above 70, though, for those of you that are interested in Coinbase. And if we can hold 70 and bounce up, then perhaps we can get back up to that previous wave 4 at 85, and then look to move higher from there. You also ask about Tesla, which is really interesting right now. We take a look at Tesla, and it's interesting because we have this really nicely formed triangle right in front of earnings. So here's the big triangle right here, and the earnings report coming out, as you can see, on the 18th of October, so next week. And the last earnings report, things didn't go so well. I told everyone that I could try to tell, blasted it as much as I could. Elon had told us that it wasn't going to be a good earnings cycle because production would be down. They had shut down some factories. They were retooling them, upgrading them, etc. So, and just right on cue, we had to move to the downside following that earnings report. Now, what are they going to show? It has production ramped back up. Our sales remaining strong. Could we have a positive report from Tesla, which would allow a potential upside breakout? But as I've mentioned before, Elliott says triangles trump everything. So we could go either direction. But if we do put the Elliott Wave pattern on, you can see that it is not currently in a 5-wave impulse pattern. And that's due to the fact that we are in a corrective triangle. So which way we go is going to be based on that earnings. I think we're trying to maybe sneak to the downside today, but you could also, I mean, it's not an exact science on drawing these trend lines on triangles. You could certainly draw your trend line of the higher lows there to include today's move and say, yeah, that's not really a breakout, but it's clearly a well-formed triangle. And whichever way we go, again, I think depends on earnings. If we look at the ADX, that's what I like to look at on these triangles to see if there's going to be a significant breakout. Look how low the ADX is. It's broken below 13, which is the level that I start to look at. Okay, a stock's ready to move. When you consolidate, that ADX comes down. The ADX measures strength of a move. So a very low ADX is telling you there is no trend or it's trendless consolidation. And when we get below 13, it's been my experience that means the stock's getting ready to move. So when you couple a real well-formed triangle with a low ADX, I think we're going to see some fireworks on the earnings report that comes out for Tesla next week. So I can certainly understand why people were interested in that. Other stocks of interest that were being talked about today, look at that move to the upside in Dollar General. That's probably not what you want to see for a strong economy. We've heard about how strong the economy is. We're not going to have a recession. Soft landing, no landing, all those things. I'm in the camp that we will have a recession. My experience and disciplines will not allow me to ignore what the bond market has been telling us for over a year, and that's that a recession is coming. So I do believe that. But a nice gap. I wish it wasn't a gap up off of that wave 5 low, right in that 61.8% fib level. So it's a strong level. We had a nice little base here. The gap up. Perhaps we could get a bid in the next few weeks on Dollar General. That might be something to keep an eye on for a potential long move. BP, we've been talking about how the oil stocks are all getting ready to report earnings over the next couple of weeks. Now, look at that move in BP. The only problem here is it's a big vertical. I don't like this. I hate this vertical stuff. And then you get this big vertical move with a doji today. Hate that as well. And then when you look at where the 10-day moving average is, I've said this numerous times, no security in any time frame gets very far away from the 10-day moving average. And so we're a bit overbought there on BP, but certainly nice moves to the upside. In addition to that, we've got some resistance on BP. So if you've been in this and enjoyed this run, you might want to tighten those stops, being at resistance, a doji, a vertical move away from the 10-day moving average. All of those are adding up to, maybe we're due for at least some consolidation, if not a little bit of a pullback out of BP. And you can see where the move was. A nice move to the upside today in oil. We had a little bit of a bounce up after that news over the weekend. But Israel or Palestine are not big oil producers, but where they're located is right in the middle of where the transportation of oil comes. And could that affect oil? But a big move to the upside nonetheless in oil, and that also affected the XLE. So the energy sector ETF having a nice move to the upside. And you can see this is a well-formed 5-wave impulse pattern, with that wave 4 also right in the 50% area where we could have a move higher. Now, notice difference between the XLE and BP, and that's kind of why I like the XLE to be long here on this increased price of oil going into the earnings season with all the oil companies. Is the XLE is not showing in the overbought scenario that BP was. We're just above the 10-day moving average. The 10, 30, and 50 are all there. We're just breaking above it. And so moving above there, we want to see follow through. So where we finish on the XLE on Monday is going to tell a lot. One day doesn't mean anything. You've heard me say that numerous times as well. You have to have the second day follow through or confirmation day. If we can continue that move with a higher close on Monday, then perhaps we are ready to go up towards that wave 5 target by the end of the year on the XLE. Certainly, increased oil prices are not going to help any potential recessionary pressures that may be coming to the market. Last but not least, on the stocks of interest, Best Buy, interesting. They came out today and said they're not going to sell CDs, Blu-ray, any of that stuff anymore. Man, that's kind of for someone that's been around a while to think about, are we going to really start to see the end of CDs, et cetera? CD players, Blu-ray, all that kind of stuff. It's just all streaming now. We have a really nice downward channel here on Best Buy, in addition to a 5-wave impulse pattern to the downside, a little bit of a bounce up, almost to that 38.2% level. Then we move lower, and you can see it does look like with this break below the area here at 70 that we may be looking to come down towards this wave 5 low here on Best Buy. So that was support. We broke through it in October. We came back up, tested it, tried to break above it. Didn't have any follow-through days. This was a close way off the highs. There was an attempt to move higher here on the 11th of October, and then since then 2 down days and breaking back below 70. So you could look for that to have a potential follow-through to the downside there on Best Buy. But that news was really interesting to me for sure. Looking at a couple of other of our markets, the Qs, everybody always wants to look at the Qs. A well-formed 5-wave pattern to the downside on the Qs with wave 4 right in that 61.8% level. Not doing too well today. So it's held up pretty darn well for what's happened recently, but it did succumb to the selling pressure today. Once again, is that just position squaring and the buyers come back at the beginning of next week if nothing crazy happens over the weekend, or are we turning now and starting to head lower here? And that would certainly mean that rates turn and go back to the upside. So rates going down, the Q's going down. As you can see, that correlation that I talked about at the beginning of the recording seems to have broken down, at least for today. Looking at the Russell, wanted to show you that because that's right at that 170 level. How long have we been talking about 170 and 190 on the Russell? Forever, it seems like. Well, we're back down testing it again. We held it back in March. We held it in May. Took off to the upside. Some of you have noted in the past this head and shoulders pattern set up here on the IWM. So good on you for noticing that. It's a pretty decent one, honestly. So left shoulder, head, right shoulder. We broke below the neckline. We're holding this support at 170. But if you measure, and this is how you look for the movement on a head and shoulders, you go from the neckline to the top of the head. So call it roughly 180 to 197, so 17 points, 182. That brings us down to 165, meaning that we might break below that 170 support level. Now, that looks pretty ominous there, but if we go back a ways, you can see that, 165 was support going back into the summer and fall of last year, 165 held. But if we break 165, there's Katie again. That's the whole Katie bar the door thing, because there is nothing below 165 on the IWM. That even prompted a viewer on our TradeFinder to say, could 100 be in the mix for the IWM. That would mean that things are really, really bad. I don't think we go that far, but it would be, where are we going if we break 165? Now, it has to happen first, but if we did, gosh, it could get really ugly on the small caps, and that's not a positive for the economy either. And then last but not least, looking at our friends over in India, whose market is still hanging in there pretty darn well. We've done some webinars for the folks over in India, and they're pretty proud of how their markets performed, as they should be, coming out of those lows from March with this big move. The IMF actually raised their economic rating on India. So if we can hold this 44 level, that's the key. So if you like the INDA or you like the Nifty better, but you can look at the INDA, 44 is what needs to hold here. It's really trying. And even though we do have a labeled wave 5, it wasn't very far of an extension. It really only went up to the 38.2% level. So if we can break above that, we do have the potential of going up towards that wave 5 level in between 46 and 47. So that could be a place to look for some long positions, especially if we do start to see some recessionary pressures here in the U.S. But earnings season's coming up. It may be a wild ride over the next few weeks. So hope you join us each and every week. Enjoy your weekend. Hopefully it'll be a calm one. Look forward to talking to you again next week. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.